Hello everybody, my name is Dr. Christophe Fougère. I'm a professor of economics and finance. Welcome to Mastering Money, Session 1, What is Money? Why Gold? Part 2. What are the learning goals for this presentation? First, we're going to take a look at what the Triffin's dilemma is and why it caused the international monetary system to collapse in 1971. Why the Triffin dilemma still exists today, and lastly, the multiple attempts to return to a gold standard and the problems associated with it. So now, let's begin with the Triffin dilemma. In 1944, the Bretton Woods agreements are signed. The new system is called the Gold Exchange Standard, and the dollar becomes the dominating currency in the world. Now, the system works as follows. Gold is no longer at the center of the monetary system, the international monetary system. The dollar is. So all other currencies are exchangeable against the dollar, and only the dollar is exchangeable directly against gold, because at that time, the US owns about 2/3 of the gold reserves in the world. So what is Triffin's dilemma? Triffin's dilemma is the following. Since the dollar is the reserve currency, it has to be made available to all the other nations. And to provide enough of these dollars, the only way it can be done is if the US runs a sustained trade deficits. Why? Because that means it buys more goods than it exports, and therefore it gives out more dollars than it converts dollars back into its own country through exports. But this puts the system at risk. If the amount of dollars that are produced and issued and created by the US outpaces the amount of gold reserves that the US owns, then the dollar will lose its value, and the other countries and the holders of dollars will lose faith in the dollar and essentially will not want this money anymore, and that will precipitate a crisis in the whole system. What Triffin says is that this outcome is unavoidable. To solve the problem, the US must either produce inflation or suspend convertibility of the dollar into gold, which then would break the system down. But this is exactly what happened in 1971 with the end of the Bretton Woods Agreement. At that time, one of President of France, Charles de Gaulle, advisors, an economist named Jacques Rueff, was saying something very pertinent, which is that the US is able to keep running a trade deficit precisely because it is the international reserve currency, which means that the American consumers are financing their high consumption standards of living by essentially having the Central Bank of America printing money. And this is still very relevant today. If we look at the foreign reserve currencies held by central banks other than the US, we see that about 65% of their reserves are held in dollars, which is a huge amount of reserves. And that means the dollar and the US still running a trade deficit and still financing its high level of consumption and imports by printing dollars and issuing dollars. Now let's look at some new strategies that are pursued by China. In 2009, Zhao Xuanzhu, the governor of the Bank of China, gives a very famous speech in which he urges the international community to revive a type of currency, a new international reserve currency, independent of any particular nation and able to remain stable in the long run. While this currency already exists and has been in existence for several decades, it's called the SDR, Special Drawing Right. So Governor Zhu is essentially asking the international community to adopt the SDR as this reserve currency. The attractiveness of the SDR is that it solves the Triffin's dilemma. Why? Because SDRs are issued by the IMF. IMF is a banking institution, and it's not a country. Therefore, it can issue as much or as many SDRs as necessary to enable the role as international exchange currency without having to run a trade deficit and then falling victim to Triffin's dilemma. The 1st of October 2016, the Chinese currency, the yuan, actually joined the US dollar, the euro, the yen, and the pound sterling in the SDR basket, because the SDR is actually a basket of currency and therefore takes its value from the components of its basket. In a second step, China has also created two institutions. In 2014, the Shanghai International Gold Exchange, which aims at competing with the London bullion market, and it's a trading platform that seems to allow or puts an emphasis on physical gold delivery, so much more attractive for certain type of traders. The other institution that was created in 2016 is the Asian Infrastructure Investment Bank, which aims at furthering and promoting growth in the BRICS, that is Brazil, Russia, India, China, and South Africa. It actually directly competes in its role of promoting and financing growth with the IMF and the World Bank. Together, these two institutions may allow China to prepare the possible launch of a new currency, which could be the yuan backed by gold. In fact, there are some hints that this is a strategy that is pursued by China currently. In 2015, the Chinese government reveals that its gold reserves stand at about 1,658 tons, which actually represented a 57% increase over the course of the past 6 years. So a huge accumulation of gold. They report it to be about 100 tons of gold purchased, physical gold purchased per year. And experts estimate that this amount could be as much as 5 times bigger. So a question is contemplated by a lot of politicians. In fact, in America, for the last 50 years, off and on, there's been a debate about the legitimacy of the Federal Reserve as an agent of the monetary policy, because the Federal Reserve is perceived as a private institution that doesn't necessarily respect the wishes of the American electorate and its wishes in terms of economic policy. So the main questions that are often asked are, how do you control monetary policy? And second, what do you do when there's a loss of confidence in the dollar? That would be from the standpoint of American politicians that are critical of the Fed. In many countries, other politicians are also longing for the return to a gold standard. Is it feasible? So let's just look at some of the problems and the issues. Well, let's go back a little bit in history, and in 1890 in the US, if we looked at the general level of prices at that time, it had sustainably been dropping from its level 20 years prior. In fact, the cumulated drop was 55% compared to its value 20 years prior. Real GDP had grown about 5% a year, but the stock of money only grown by 2.6%. The issue was that gold was not being extracted fast enough. And so there was not enough money. And if there's not enough money, the value of money appreciates against the value of goods and services. In other words, the value of goods and services depreciates against the value of gold, which is deflation. The American Congress tried to do something about this by trying to enact the Sherman Silver Act, which reestablished bimetallism. That means silver would have become the other precious metal that would back the dollar, but that act was revoked by President Grover Cleveland a year or two later. So what are the main issues or the conditions? Let's start with that. The conditions to reestablish a gold standard. First, the money supply of a nation must evolve in direct proportion of its gold reserves. And that's true because if the money issuance, M1, grows faster than the gold reserves, then it depreciates and it loses credibility. And there also must be enough money to finance economic real growth. So what are the problems? Well, the problems is that if the gold reserves are finite, and you can't, you only have a finite quantity of gold on planet Earth, then eventually, if you mine all the gold possible, and the economies keep growing, the value of goods and services are going to depreciate against that fixed stock of gold, and you're going to have what's called a secular deflation, which is a sustained decrease in the general level of prices. Now, Atkinson and Keogh in their 2004 paper, they differentiate between good deflation versus bad deflations. And for them, good deflations are deflations that come from the fact that you have technological progress, and technological progress makes growth, economic growth, possibly faster than the growth of the stock of gold. But that's not an issue because they're saying it's validated by the fact that you're creating greater values and you're creating essentially faster growth and productivity, and that is not a bad thing. On the other hand, bad deflations would be just the fact that you are not able to manage the issuance of money in the right way, just like in the 1890s, and you are confronted with a situation of money is not there, it's not enough of it, and whatever the growth might be. And that would trigger a sort of deflationary spiral. But there could be a way to fix the situation, and it has to do with expectations. If the economic agents in the economy, businesses and consumers, accept deflations and they can anticipate it, for instance, on the wages side, if the businesses tell their workers, listen, we're going to expect a 2% decrease in the general level of prices next year, we're going to pay you 2% less. And if the workers accept that, then there's no problem. The salaries would decrease, but the purchasing power of these workers would be maintained because the general level of prices will also decrease by the same amount. The only issue with this logic is what's called nominal rigidities or nominal illusion, where workers would have a really hard time accepting negotiations of their wages downward. Another issue would be that there could be a flight to gold in periods of crisis, which we have witnessed time and time again, and therefore the currency loses its credibility and people want to convert currencies into gold. So that could be an issue. And another issue that is rising due to the internet and due to the computer speed of current computer speed is the creation of electronic money, which can be competing with the return of gold. So in the end, how can we make this work? What are the potential solutions? First, accept secular deflation. As I said before, if the expectations are correct about anticipated deflation, then economic agents can adjust their earnings, and the real purchasing power is not affected. Could we possibly increase gold reserves? That is a big question, which means that prospection would have to start beyond the planet Earth, which is currently technologically too costly. Can we, another potential solution, raise the velocity of money? That is an interesting question. That means, can we raise the speed at which money circulates in the economy? And we know that with the speed of computers, there could be, this could be potentially done, but are there upper limits to these kinds of technological advances in the speed of transaction? Possibly yes. Now, another solution is that we hit what's called secular stagnation, where economies are actually just hit a plateau of growth, and growth per person, growth per capita worldwide becomes zero. That means growth just is enough to sustain the growth in population. And if we hit that level, then we can have a gold standard, because the physical stock of gold would be constant, and the consumption per person would also be constant. So we would have an adequation between the two. Another possible solution is to have money being backed by a really tiny quantity of gold. In this paper of 2015, I proposed that money be backed by nanoparticles of gold. So thank you very much for your attention.